Now, here's the host of Good as Gold, Nick Grovich.
Hi, Nick Grovich. I'm live in Phoenix today. If you'd like to join the program, ask some questions, call in at 602-324-1510. I'll be glad to answer your questions or go off on a different turn than where I'm headed here today. Obviously, at some point, I do want to talk about gold. If you're watching, you know gold is up to about 1153, which is a 5-week high today. A lot of people have been. Most people right now are looking at the charts as opposed to the fundamentals, and it's very likely we'll see it run up to $1175 or $1,200 before we have to start getting too nervous about it. Platinum made a big move. We're up to about $1,035. It's almost a 10% jump in the platinum prices, which I'm really happy to see because I've loved platinum here for quite some time, and it's kind of nice to see it outperforming gold right now. Silver, all the metals are up. Silver's up to $15.60. Actually had a smaller move than gold or platinum today, and I think part of that is because it's a safe haven type of move. I mentioned before, the metals move, for different reasons. Sometimes they move up or down based on commodity prices. Sometimes they move up and down based on I call it financial reasons. Most people call that a safe haven. When people are getting a little nervous or looking for a safe haven, that's where gold, silver, or even platinum come in. And as usual, the reason the metals are stronger, well, there's a couple reasons actually. The dollar got weaker today, and as is typical, when the dollar gets weak, gold goes higher. The second reason is that people are watching the Fed. We've been all year long. The Fed's been talking about raising interest rates, and in July they set out some conditions that they needed to see to raise the interest rate. A lot of people were expecting that to happen in September. Now people are starting to say, well, maybe December. I heard some people on the radio here talking about maybe they'll hold off until next year. So that's all positive for the metals. And again, I know I'm talking basics, but the reason for that is, in the world of investments, every investment's competing with another investment. So if they raise the interest rates on the dollar, of course, people are getting a guaranteed return, albeit very small. But on precious metals, you don't get a return unless you buy low and sell it and take your profits at a higher price. So it's a little different type of investment if you're buying for an investment reason. So the weaker that the stock market looks, the weaker that interest rates are, the more likely people are to turn to precious metals. But like I said, the Fed's conditions to warrant a rate hike have not been met. There's concern over lagging inflation. Most of us are always worried about inflation. What they've been trying to do the last couple of years is they've been trying to create a little inflation. The government likes a little inflation. It keeps, it makes the dollars that they owe worth less. So they like a little inflation in there. What they're really more worried about is deflation. Because deflation would make every dollar they owe cost more. Does that make sense? So if your dollar's worth more later, you're paying off with more valuable dollars. If in inflation, your dollars are worth less later, so if you borrow money today and you pay back with dollars that are worth less, that's really great for the government. And most people think a little inflation is always good for the economy. That's a whole other topic. But they're really worried about deflation because deflation is much harder to turn around than inflation, and it really has a very detrimental effect on the overall economy. So that's really where the Fed's at right now. They'd like to see a little more inflation. They don't like the fact that oil prices are low. Oil prices are at, I think it's 6-month low right now. The Chinese market fell another 7% this week. So, nothing. The global equity markets just don't look good right now. On a technical standpoint, what that means if you're just reading charts and 50-day moving averages, 200-day moving averages, what they're looking at is right around 1130, 1138. That's kind of the critical area for the short term. So that's where the technicians are watching. They're looking for that 50-day moving average to hold. And like I said, $1,200 an ounce is the next key resistance area. For a couple of weeks now, I've been saying I thought that we were due for a little bounce in gold, and that seems to be what we're getting. I just can't tell you what happens for the long term here. We could get to $1,200 or $1,300, and it could go back to $1,000 or $850. No one knows for sure, but right now, like I said, we are on a nice little rebound. If you bought under $1,100, you're probably feeling pretty good about yourself right now. But I wish I could show you a chart over the radio. I could show you what I'm looking at when gold, silver, platinum trade within a certain range. It's called a channel. But that's where they're getting this $1,200 price break at. So if we get to $1,200, we go through $1,200, that would be a really, really bullish outlook for gold. So, I'll come back to gold maybe a little later in the show, but I did want to talk a little bit more about coins. Seems like every week I save that for last and I run out of time. But before I do that, yesterday gold closed at $1,135. We had a winner in our gold survey. It was Andrew in Chandler, who guessed $1,134.10. So, Andrew, you got very close. We will be sending you a nice new shiny Silver Eagle. If you want to get involved, visit us at AmericanFederal.com, answer the quiz, and what you're doing is you're guessing where gold will close next Wednesday. And if you get the price exactly on the money, you get a $5 gold eagle. It's a 10th ounce of gold. And if you are the closest, you get a silver eagle, which is, roughly about a $20 coin right now. And generally, we try and send you out certified coins that are really worth more like $30. So we try and give you something a little nicer bonus if you enter the quiz. One other thing I wanted to mention, our segment on moving America forward with William Shatner and Doug Llewellyn, who you may know from Court TV and Judge Judy, and myself, should air on September 13th. It's on a cable station, which unfortunately does not air in Phoenix, but you can watch it on our website at AmericanFederal.com. I would encourage you to go to the website, and we'll put more information up on there. I imagine we will post the entire show, and we'll probably have it on YouTube or something like that too. So, check on the website. We'll tell you where you could watch that. That was a lot of fun. Doug Llewellyn interviewed me. William Shatner asked a question or two. And, it was really great to be honored with the Moving America Forward Award. So I'd love for you to watch that, and we'll get you more information on that. Last week, I was talking a little bit about seated Liberty coins. Those are the dimes, half dollars, and quarters is what we were talking about. And the reason I'm talking about this, I'm not trying to, if you're just into bullion, if you're just really buying gold, silver, platinum, I'm not trying to talk you out of your precious metals, but there's an awful lot of people out there that buy $20 Liberties and 2.5 Indians, St. Gaudens, Morgan dollars. So these people are already in the rare coin market. And I just like to show you or offer you some of the other types of coins that are available as an alternative. A lot of the coins I've been talking about, the Barber coin, Seated Liberty, I think they're a great alternative if you're in rare coins already, like I said, the gold coins or other silver coins like Morgan's. I think they're a great alternative for investors and collectors, and right after the break, we'll talk about this.
Once again, here's Nick Grovich.
Okay, Nick Grovich back with you. We were just going to talk about some alternatives to the coins that are being offered by a lot of the big, I'm going to call them investment houses, boiler rooms, whatever you want to call them. If you ever call a lot of the larger dealers, the guys who have 20 to 100 brokers sitting in a room trying to sell you coins, generally what they're going to try and sell you are common coins. I every day I get a call from somebody who's being offered Morgan dollars or St. Gaudens or 20 Liberties, coins like that. And there's a reason for that. Those coins are extremely common. They're kind of a dime a dozen, if I can say that. And they're just readily available, so it's a great thing for them to sell. They can sell as many as they want. They don't have to worry about running out of inventory. In fact, usually they don't even have to stock inventory because those types of coins are readily available. And we talked a few weeks ago about barber coins as an alternative, and today I wanted to finish up a little bit about the seated Liberty coins. Now, the seated Liberty coins, it's exactly what it sounds like. There's a Liberty on the front, a full body Liberty seated, and sitting with a shield that says Liberty on it. And the coins that we're talking about are probably the most common of the seated Liberty type. That's the ones with the motto. The motto is "In God We Trust." They started making those in 1866. They stopped in 1891. Now, the seated Liberty coins actually go back farther than that. They actually started making them in 1839, but when you get into that first variety with no motto, in other words, it does not say "In God We Trust," you get into a little pricier area. And you get into an area that's not as highly collected as the with motto variety. So the one thing I started talking about last week, and the show was over before I got a chance to really explain it, was one of the methods I came up with as a kid to try to value coins. In other words, get relative values of one coin to another. And I'm going to explain this to you a little bit just because I think it's kind of fun. But I came up with a basic, very, very basic formula when I was a kid. And you have to remember back then in the 70s, we didn't have all the information we have available today. I mean, today you can find out how many of every coin was graded by PCGS or NGC. They give you estimated prices. They give you auction prices. They give you so much information that there's much better information available. Back then, about the only thing I could start with was the red book that gave you a mintage figure. And, so I was basing the relative scarcity based on the number of coins that the government made rather than the number of coins that survived. So even that little difference would give you a much better, my little basic formula gives you a much better handle on it than what I did, 40 years ago using the mintage. And I'm going to try and explain that to you. Now, understand this formula doesn't take into account a lot of factors. One of the things that it doesn't tell you is how collectible the coin is. It doesn't tell you how recognizable the coin is, the depth of market, that is how easy it is to resell, it doesn't tell you how possible it is for more coins to show up. So, for example, a $20 St. Gaudens, you'll see that there's somewhere about, in MS65, there's somewhere around 250,000 coins already graded by PCGS and NGC. That's a huge, huge number of coins. And because there's constantly coins coming in from Europe, that number tends to grow pretty substantially month after month. I mean, you'll see hundreds or thousands of new coins hit the market every month. So that's something that's different than when you get into the real collector coins like the seated Liberty coins. So just to give you an example how the formula works. And all this does is it measures relative rarity and pricing of the rarity. So if you look at a seated Liberty dime, now we're not looking at any specific date, just the type of coin, in proof 67, and this is where I started where I ended last week. There are 346 coins graded. So I look at that and I think, okay, first of all, seated Liberty coins are very, very popular with collectors. They're popular with more educated investors. In other words, investors who don't know anything about coins may not know what a seated Liberty coin is, but any investor who's been even mildly involved in the rare coin market knows what a seated Liberty coin is. So it has the recognizability, which is something you want. It's got the rarity because 346 coins is a tiny number of coins available, or graded, I should say, not necessarily available. But there's only 346 coins graded in the last 30 years. That's a tiny number. Now, will that number grow? Yes, it'll grow, but I wouldn't expect it to double or triple overnight, unless they found some kind of strange hoard, which would be very unlikely. So here's how the formula works. The price of that coin is roughly $3,000 a coin. You multiply that times the population, which is 346, and you come up with a number of 1,038,000. So what I do is I break it into billions so that you're dealing with smaller numbers. So for me, that would be 1.038. That would be my index number, 1.038. I just chopped the last three zeros off, basically. And let me get to the right page here. So I look at that, and then I would compare it to other coins to see, well, what is that 1.038? That's just a number at this point. It doesn't mean anything to you. And you would compare that to other coins. So let's take the same coin, a Seated Liberty dime in proof 65. Okay, that coin, there's 1,647 coins. The coin goes for about $1,100. So what you're trying to decide is there's let's just say 1,650 coins. They're available at $1,100 a coin. Or there's 346 coins available at $3,000 a coin. Which one's the better buy? That's all we're trying to figure out. So if you take the 1,650 times $1,100, you come up with an index number of 1.81. That's 1.81 million is what your index number would be. So that tells you, if that's all you're looking at, the proof 67 at 1.03 or the 65 at 1.81 tells you the lower number is the better value between the two coins. So hopefully that's not too confusing. So you could sit down and you could go through every date. You could go through every grade. You could compare the dimes to the quarters. You can compare dimes to Morgan dollars. And that index number that you come up with will tell you which coin is the better value simply based on the number of coins out there, the population, and the going price of the coin. So what I used to do, here's an example of what I did when I was younger, is I looked at silver dollars because silver dollars were very popular, and that was an area that I really enjoyed collecting. And this is actually one that back when I was about 13 years old, my dad would listen to me, and he'd take my numbers and ask me, okay, which one's the best number? Let's go buy a bunch of these. And it's funny because some of the dealers he bought from are still actually in business. So here's another example, an 1878 Morgan dollar. Now, when we did it, we didn't have population, so it had a mintage of just over $750,000, and it had a price of about $1,600. You'd come up with an index number of 1.19. So a lot of people would look at that and say, well, that's a rare date. You're paying $1,600. Wouldn't I be better off with a common date coin like an 1881S? Now, if you don't know rare coins, I'm probably confusing the heck out of you. If you know anything about coins, you're probably following me. But an 1881S Morgan dollar is a very, very common coin. They made almost 13 million of them, but they're available for roughly $175. So a lot of people look at that and say, well, I'd rather pay $175 than $1,600. Well, with my little formula here, we go through the 1881S, we take the 13 million times $175, we come up with 2.233 million. So that's twice as common as the 1878. So that's twice the index number, which tells you again, the 1878 is twice as good a value as the common date. And like I said, you can go through this with the populations. When you use the populations, which is really a great way to go, it actually shows that the 1881S, the common coin's actually 10 times the value, which means 10 times a worse value than the 1878. So I'm kind of throwing this at you. If you want to have fun with it, you could do this from one series to another. You can do it from one coin to another. But it's just kind of the beginning. It's kind of the beginning of showing you how to figure out relative rarities. There's a lot more that goes into this if you're actually trying to use these formulas to decide what the best value is for your money. And I'll go through one or two more examples. I think I don't want to go into too many because I think I'll confuse you, but I'll go into one or two more that'll really show you where I'm headed with this and why I really like certain areas of the market if you're in the coin market at all. But like I said, the trick is you have to know what some of these outside factors are, and I'll talk about those too. Looks like we're coming up on a break, so I'll continue with this after the break. We'll talk a little bit about coins you're more familiar with, like St. Gaudens and maybe 20 Liberties.
Once again, here's Nick Grovich.
Nick Grovich back with you. We're talking a little bit about relative rarity between coins and using that as at least one factor when you're deciding to invest in coins, as far as it helps you pick out which coins are the best value for your money. I'm going to ask one trivia question. This is a super easy one. I've actually already given the answer, so hopefully somebody's listening and remembers this. We're talking about seated Liberty coins with motto, which means they added the words "In God We Trust." What year did they start adding the motto "In God We Trust" to coins? That's a simple question. Don't Google it. Just if you've been listening, hopefully you know that. So we'll throw that out there. That'll be good for a silver eagle. So here's where I'm going with this relative rarity, and there's a lot more to it than this. But one of the most common coins that's recommended to people is the $20 St. Gaudens, and most of you know what that coin is. It's a $20 gold piece. It's just under an ounce of gold. They started making them in 1907, stopped making them in 1933, and like I said, it's a very common coin. They're available by the thousands or hundreds of thousands. So if we use this little formula here on St. Gaudens, let's go with a high grade MS65, which is a higher grade. They made pretty close to 250,000 coins, 214,000. And these coins retail right around $2,100. Actually, $2,180 is what PCGS says the retail is on them. So if you use my formula on this and then knocked off the zeros, you'd come up with 467 as an index number. Now, if you remember the other coins we were looking at, they had numbers of 1.8, 1.03. St. Gaudens, you're getting a 467. So I look at that and I think that is such a gross. Now, granted, there's gold in there, so you can't get below the price of the gold in the coin. But when you're looking at a high quality coin, it has that high of a number in comparison. It makes a lot of these other rarer coins look like a bargain with a value of 1 compared to a value of 467. It's a huge index number. And you might ask, so why is that high? Well, out of that nearly $2,200 in value, you've got $1,000 worth of gold. So that gives you half of that number. But even if you knocked half of the index number off for the gold value, it still leaves you with a number of roughly 230 as an index number. So 230 is still a very high index number when you can buy other coins for less money that have an index of 1 or 2 or 3. The trick is how you apply the factors. Sometimes dealers are doing promotions. That's going to give a coin a higher price and thus give you a higher index number. If you just use my simple index, it's only giving you relative pricing. It's not taking into account dealer promos. It's not taking into account demand for the coins. And all that affects the price of a coin too. Now, this is where it's worth your while to deal with somebody like my company, American Federal. We do all this work for you. We figure out which coins have demand, which coins have some market depth. So market depth just means that there's somebody to buy your coin when it's time to sell it. You can get into really esoteric coins like the old patterns. Patterns are coins the government made when they're just testing different designs. And they're not coins that were ever released for circulation, but they're coins. In other words, if they were going to make, back in 1982, they were going to make the Lincoln cent out of aluminum. So they made one aluminum cent for each of the congressmen and let them carry it around. Now, they were all supposed to give this back to the mint. The mint got 0 coins back. So there's whatever that number was. All the congressmen kept their coins. Well, that's a pattern coin because it was made out of aluminum. It was a trial piece, and it was never intended for circulation. Well, some of these coins have mintages of 1, 2, maybe a dozen, so they're very low. So you can imagine their index value would come out teeny tiny because there's no coins. There's no coins out there. But it's such a specialized area of the market that when you go to sell those coins, you might be lucky if we could find a half a dozen people in the country who really care about it. Maybe that's an exaggeration, but I know when I do get pattern coins and I need to sell them, it takes a lot of work to find those collectors because, if there's 100 coin collectors in a room, you're lucky if one of them is interested in patterns. So part of this is you want to get coins that are the most highly recognizable by collectors. You want coins that instantly a collector will say, oh yeah, I love seated Liberty coins or Barber coins or $5 Indian head gold coins. So that's one of the catches that, if you're not if you don't really know the coin market well, these are the things that are going to foul you up by just, taking this little bit of information I give you, and you go home and you put index numbers on all the different coins, and you think, oh, well, this is simple. We just buy whatever coin has the lowest number. You might end up with a lot of really esoteric coins that when the time comes to sell, you simply can't find a buyer. I remember years ago, back in the 80s, there was a dealer who, what he would do is he'd go into these different areas like the seeded Liberty dimes we're talking about, and he would take it a step farther and try and find the really, really low mintage coins. So you have coins like 1866, 1867, 1868, and they had mintages of between 6,000 and 8,000 coins, which is very small. And other coins at that time frame would have mintages in the hundreds of thousands. So his reckoning was that you'd go buy these coins that had 6,000 minute or 8,000 minute. You're buying the rarest of the coins. But again, there's a little catch to that. If you could buy those coins and maybe pay an extra 50 to 100% premium on them, so you're getting a coin, let's say that's 10 times more rare and you're paying 50% more for it, that might be a good deal. But if you're paying 10 times more for the rarer coin, it's a lot of times that doesn't work, because here's an example. On these coins, they're very, very low population, very low mintage coins. The problem is almost no one collects seeded Liberty dimes by date. So you might have the rarest seeded Liberty dime in 1866, but the problem you have is when you go to sell it, you've got to find somebody who cares about that date, and you're not likely to do that. We have a caller. Hi, this is Nick.
Hi, Nick. This is John in Mesa. Was it 1956 that they put the In God We Trust on the coins?
No, you just missed it.
Oh.
Take another look at it.
Okay, I will.
You're close,
Thank
though.
you.
You're close. You said
All right,
you said 1856?
No, 1956.
Oh, nope. You're off by a little 100 years or so.
Okay.
All right, thanks. Thanks for trying, John. I appreciate it. So what I'm saying about these coins, you can use some of these different indexes, and some of the myths about rare coins are you always buy the rarest. Well, you've got to buy the rarest coins that collectors actually want. Otherwise, you end up paying a huge price for them, and then you have to find the collector who wants them, and that's not always an easy thing to do. A lot of people think if they get the gray sheet, which is the Coin Dealer newsletter, that this, of course, will give them a better idea of pricing and what to pay for coins. But you have to realize there's a lot of traps in there. This is going a step past the index I'm using, but a lot of times when you get into the really esoteric or the super rare coins, I'm talking about coins where there's less than 10 graded, the numbers that you see can be quite deceptive. There might be an auction where, I'll give you an example. I had a client who had a very high grade $10 Indian head gold piece, and he paid $140,000 for it. And on the gray sheet, then they listed it at $140,000. Well, I was buying his collection, and I was trying to find a realistic price for this particular coin. Well, of course, when I got there, he pulled out the gray sheet and says, well, the gray sheet says it's $140,000. And I said, yeah, I looked that up, and one coin sold at auction for $140,000. And I'm guessing there was somebody trying to build the best set known, which is a registry set, and they just overpaid for the coin. And he kind of gave me a funny look, and I said, you're the guy who paid the $140,000, right? And he said, yes, I am. I said, the problem is you wanted to build the best set known, the finest possible set. So you stepped up and you paid a huge price for this coin. But now what we have to do is find out what it's worth to the second guy in line who wants to build the best set. And if he doesn't think it's worth $140,000, you're kind of at the market's mercy, because you're the only person who thought it was worth $140,000. And even though that got printed, it doesn't mean it's a true value. The value of the coin ended up being about $50,000, because that's what it was worth to the next person who wanted that coin. So I guess what I'm saying is, I'm giving you a lot of stuff to have fun with. I don't think I would tell you to just go use these little indexes and fun facts to go out and decide to spend a lot of money. I mean, it's fun if you're putting together a collection. You could do this to find the rarer coins, get the most for your money. But it's not really a great way to go about investing. For investing, you really need to use a professional. You could use my company, American Federal, use another P&G dealer, but use somebody who can sit down and tell you, for example, on those 1866, 1867, they could give you some idea why that is or is not a good thing to invest your money in. You want to deal with somebody who has some market experience, can avoid some of the traps that are out there, and get you some real value for your money. Looks like we have another caller. No? Oh, 1 minute. Okay, there's 1 minute left before they go to a break. I misunderstood the signal. So, part of what I look at here is a lot of people, a good number of the people who call me have St. Gaudens, and they think they're sitting on, especially if they have the higher grade, MS65, MS66, and they think they're sitting on these super rare coins, and they're actually some of the most common coins. They have terrible index numbers, and they only go up if dealers can sell more of them to other investors. So they're dependent on dealers doing promotions and running the coins up. And this is where I think the seeded Liberty coins, or even some of the Barber coins, could be a real advantage to someone who's sitting on a bunch of St. Gaudens. For what it costs for one or two of your MS65 St. Gaudens, you could trade it in and have a couple really, really nice high-grade coins that not everybody else is going to have. I mean, the one coin only 346 other people could have. You could have something really spectacular instead of just what everyone else has.
Once again, here's Nick Grovich.
Nick Grovich, we're back with you for the last segment. If you have any questions or comments, or you have anything you want to talk about, feel free to call the station at 602-324-1510. Be glad to talk about anything you want to talk about. I know some of what I'm talking about today is a little more confusing than usual. I've been working on a lot of coin portfolios recently. I think I've mentioned I'm starting to like rare coins again for certain people as an investment area again. I haven't done that in 25 years, so I'm starting to kind of blow the dust off some of the old things I used to look at. And that's kind of what brought up this whole idea of sharing some of the relative values with you. So many people talk to a broker on the phone. The broker tells them something about rare coins. Either rare coins always go up with the price of gold, or they always exceed the appreciation when gold and silver goes up, or there's just 100 different things they'll talk about. A lot of dealers are pushing the modern coins with low numbers and high grades like MS70, and so many people I talk to just kind of blindly buy whatever they're offered on the phone. And I guess what I'm really trying to do is point out that if you're going to be in rare coins at all, and that's a big if for a lot of people. I don't think it's the right place to be. But if you're going to be in it, you can't just blindly just buy a coin because it's old. You've got to put a lot more thought into that, and you've got to deal with somebody who's really going to be able to explain why a coin is worth something, why it might have potential, and really talk to you more about the coin than just selling a common coin. It looks like we have another caller. Hi, this is Nick.
Hi, can you hear me?
I can just barely hear you, but I can hear you.
Yeah, I think you're looking for the 2-cent piece from 1864. Is that what you were looking for?
No, but that does have the motto "In God We Trust" on it. So I will give you the Silver Eagle. On most of the coins, they started putting "In God We Trust" on the coins in 1866, but they did do it on the 2-cent piece in 1864. So you're right.
Yeah. Okay.
So hang on, Ashley. You'll get your name and address, and we'll send you out a 2-cent. We'll send you out a Silver Eagle. Thanks for calling in. Well, that's kind of an interesting. That gentleman had to be a collector. A lot of people don't even realize they made a 2-cent piece. The government made all kinds of crazy coins that most people don't know about. They made a 2-cent piece. They started in 1864, and they stopped making them. I think it was 1873. It was a real odd size coin. Not very popular, but he's right. It did have the motto "In God We Trust," and it was 1864. a 2-cent piece, that's one of those areas I was talking about where you could, if you start looking at coins, a lot of people get involved. They say, oh, a 2-cent piece, that's really interesting. And they start buying those. And if you start looking, again, at relative rarity and how many coins have survived in really high quality, it's very low. But for some reason, I can't tell you why it's been this way ever since I've been collecting coin, most copper coins just never seem to keep up with the overall market. And I remember reading articles back in magazines from 1963 where they talk about that. They'll say 2-cent pieces and Indian head cents are vastly undervalued, and everybody has their own way of deciding what's undervalued. And they all expect them to catch up one day. Well, here we are, how many years later? What's that, 40-some years later, 50 years later almost? And those coins really, they've gone up in value, but they haven't set the world on fire. Other coins like that, they had 3-cent pieces. They had them made out of nickel, and they had a 3-cent piece made out of silver. If you can imagine how small the 3-cent piece made out of silver was, try and figure a third the size of a dime. So they were really, really skinny and really, really small. The government made those because at the time a stamp was 2 cents, and the post offices didn't like giving out three pennies and change, so they made a 3-cent nickel and a 3-cent silver piece. They also had, talking about odd coins, I'm getting sidetracked here, but they also had a 20-cent piece for a few years back in 1876. And I don't even know why they made a 20-cent piece. It's a very odd denomination, but people couldn't tell the difference between those and a quarter. So that was a very short-lived item. So there's a lot of fun things you can collect. It's funny, I was reading an article today. I didn't bring the article with me. I should have. In the Numismatist magazine, that's if you're a member of the American Numismatic Association, they send out a magazine with all kinds of fun coin information. And the article was about basically what's a real coin and what's just stuff. And so one of his examples was an 1884 $2.50 gold piece in AU condition, which we usually would consider a lower quality, or a $20 gold piece in MS63. Well, it looks like we have a caller. I'll come back to this. Hi, this is Nick.
Yeah, Charles Anderson here.
Hi,
I
Charles.
was wondering about the practicality of collecting British sovereigns. They're a gold coin about, I think they were about equal to a pound note.
Right. Sovereign is a 1 pound coin. Of course, we don't mean weight wise; we mean currency wise. So you're right about that.
Yes, right.
If you buy them right, that's not a bad thing to collect. What you have to watch for is you don't want to pay any big premiums on them. A lot of them, they were made in a variety of mints. I can't even tell you all. I know they made them in Australia. They made them, of course, in England. They made them in Canada. They made them in, did I say India? So there's a lot of different mints. There are some very rare ones. There's a handful of them that go for decent collector prices. You could buy those. You could probably buy those for under $300 or thereabouts, and have your pick of them. So I think that'd make a lot of sense to collect them, as long as you're just not buying them as rare coins, if that makes sense. So, they're less than a quarter ounce of gold. So I've got about I'm just doing this off my head. I have about $290, $300 worth of gold. So you could buy them for probably within 10% of that. And you could buy some really rare coins for, like I said, maybe 10% more than what the gold's worth in them. So that makes a lot of sense to me. That's a method I really employ, is buying something where you're getting a lot of rarity and not paying for it. So,
yes, I was wondering about the king, the king before Queen Elizabeth. Yeah, in other words, Queen Elizabeth's father. That's what I was interested in.
Yeah, you're probably going to pay a little more for those. Elizabeth was, I don't know the dates on all the sovereigns. Queen Elizabeth goes back into the 1860s, or that's Victoria. Queen Elizabeth, then you're talking about Edward, probably is what you're talking about. But
yeah, right.
Yeah, you'll find some real rarities there. It's just a matter of poking around and finding them at a decent price. If it's something,
Okay.
it's not something I trade in, but if you want to call the office, I could get your number, and I do get them occasionally. Be glad to get them for you.
Okay, well, thank you very much. Bye-bye.
You bet. Well, it looks like we're almost done here today, so I'm just going to leave you with a couple of words, and I had something else I wanted to talk about. We'll pick that up next week. But if you're buying rare coins at all, you should give us a call at American Federal. It's 800-221-7694. I'd be really happy to go through what you have, give you an update as far as value, give you some idea of relative rarity, although we won't use the index I used when I was 13 years old. But, I can give you some ideas of what, whether you're positioned properly. Charles just had a really great idea. He's basically buying, if he does that, he's basically buying gold coins at today's low price of gold, and he's going to get some rarity. He's going to have some fun with it. And, he may end up making a lot of extra money, if that market does mature a little bit more. Some of those coins used to be worth a lot of money to collectors. It's just that market has kind of dropped off in the recent years. So, don't go at it just crossing your fingers and hoping you got lucky by buying something on the phone. Call us at American Federal, 480-553-5282. We'll give you a CPR.